Well, good morning, everyone. Welcome to our Thursday morning trading room. Uh, Hang on here a second while I get the screen share going on. Okay. Bear with me here a moment. My charts are taking a little bit longer to update. There we go. Okay, sorry. Still having a couple of problems here. We'll get things underway here shortly. It looks like we're opening up with a bit of a gap here this morning. Yesterday turned out to be a little bit more of a roller coaster than initially expected. Okay, sorry about that. Like I said, my chart's trying to update here. Okay. So yesterday we had the major sell-off going into the close, and this was a huge sell-off. The market was bullish pretty much the whole day, and then an hour and a half before the close, it started to turn on its heels, and certainly the last hour, half hour, the market pretty much in free fall. Now it looks as though the Asian and European sessions relatively quiet, a little bit of a recovery prior to this morning's open, but we have a big gap here just below the market, and we'll see whether or not they're going to be able to fill that. So there's going to be some very strong bearish tendencies, I think. Today. Right now, we're kind of trading in the thick of it here in the Geiger counter. You can see all the bullish volume going through here. A couple serious bull spikes, and that provided a little bit of a flurry out of the open. And wow, that was quick. A little bit of a flurry, and then the market just kind of falls flat. What's up with that? Okay, still a little bit more back and forth. When you get these big opening gaps, the big question is always, is that an acceleration gap? Are we going to see more in that direction? Or is that, in fact, a reversal gap? Of course, it's hard to tell immediately. So usually you end up waiting it out for a little while. So far, they seem fairly content to be trading a little bit sideways. It looks like the first in-sync eagle signal might have worked out here already. So the market opening right here, this would be your first in-sync signal. Oh, maybe it's not there just yet. It's got to be awfully close. This one would be a little bit tricky to cover. Even though you can see there's been good momentum out of the trade, I always resist putting my stops so close to the entry price. It just does not give your trade any room to move. Ideally, if you stay two swings back, there's swing one, here's swing two. Oh, actually, I can afford that on the eagle. That would be an ideal start. And you can see, once again, that first in-sync signal working out really well. So here you would be 10 minutes into your day and your day could be done. I've mentioned before, for you Raptor traders, you need not feel left out on that. You can do the exact same thing. You're looking for your first signal where everything is in sync. So here's the market open. Your first signal is counter trend. So that is not in sync. We're talking about looking for a signal that is in sync with your trading bands. So right there, your number 3 signal. which probably developed about the same time as your eagle signal. And here too, you can see just, well, no problem hitting your high probability target. And once again, you're going to want to probably swing one, swing two, or at least the hard edge. Yeah, no trouble at all finding your target. And if you're looking to make just $100 per contract per day, well, there you go. You're less than 5 minutes into your trading day, and you've already met your objective. So initially, anyways, the market looking like we've got a bit more of a bullish bent to it. It's still early though. We're only about 15 minutes into the session. All right, a very, very strong bull move. So I'm definitely going to be looking, I think, for another buying opportunity here somewhere in all this. The seller's going to show up and push the market back, at least short term. Wow, what a crazy strong rally right out of the open. Phil's asking here about the Falcon. Phil's asking, is that a flat enough angle on the Falcon for the resumption of a trend at 642 on my chart? Okay, I think what Phil is referring to is the angle here of the trend line, because typically when we're watching a late filter entry signal like this one right here, where the filter goes out of sync and comes back into sync, it is very desirable to have a flat trend line. This is just your basic trend line touch signal, where in the case of the Falcon, when you're in the middle of a trend, the market will occasionally pull back to the trend line and touch the trend line before it continues on its way. You can see several examples of it here. Honestly, Phil, I don't pay that much attention to the angle of the trend line on a trend line touch, but maybe I should. I just know in the case of the late filter entry, it's very desirable to have that flat trend line. Normally with the follow-up signals, I want to see them actually touching the trend line. What you're going to find is, and I may not be able to find you an example because it doesn't happen all that often. Oh, well, here's one. So here's a continuation signal right? Because we're in a downtrend. Here's a continuation signal, but it forms away from the trend line. Oh, here's another one. And what tends to happen is that the market will want to pull back into that trend line. You can see sometimes it can end up giving you some little bit of heat as a result. So on those trend line touch signals, I want to actually see the price get into that trend line. And with all signals, not just the Raptor signal, but with all signals, we don't want to see too many signals within a trend because they do tend to get stale. This is true of the Hawk, the Falcon, the Raptor, the Eagle, all of them. Once we see a trend, we can anticipate a continuation signal to be sure. But we don't want to see signal after signal after signal after signal because eventually one of these signals will fail. What happens when a signal produces is there's a shift in momentum. So in the programming, it recognizes that prices are going higher. Then there's a pause somewhere. And then there's a resumption of the trend. This is when your signal is going to print. Well, if we get pause, 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 the market's not going to tolerate too many pauses. And even visually, you can see the length of each of these legs getting a little bit shorter, and the progress the market is making is less, right? Look at the gains here on the first one. Then here are the gains on the second one. Well, here's the gains on the third, and here's the gains on the fourth. Notice how the market is slowing. And that's because, wrong tool. That's because the sellers are pushing back. They're pushing back some more. They're pushing back some more still. And then they finally take control and push the market lower. This is the natural movement within the marketplace. It's always going to be testing the highs and the lows to see who is stronger, the buyers or the sellers. And of course, if the buyers are stronger, well, then the trend just keeps going higher. If the sellers are stronger, the trend will keep going lower, but there are limits. So you never really want to see, the market continuing in one direction for a prolonged period. You want to keep a lookout, make sure that you are actually still making progress. And if you look at any trend, you will see the trend eventually, getting smaller, the gains getting relatively smaller, and then the reverse coming. We're almost outside. That was a good question though, Phil, and I am going to pay attention. I almost secretly suspect that we want to see more angle, more momentum in a trend line touch. Because a late filter entry signal is almost like because there's a shift in the momentum here, there's a shift in the Falcon filter. It's almost as though, in this case, the buyers get startled at how strong the sellers are, and then they overcompensate. They come back and they say, oh, no, we're in control, and they push the market up. A trend line touch, on the other hand, because it's a continuation signal, I almost suspect we want to see more angle. All right, in the meantime, we continue flip-flopping. Geiger counter getting a little bit more bearish here. And certainly something resembling a short-term top. All right, a little bit of a bearish push, maybe a little bit of a top. I don't want to get too excited about shorting the market. We're very close to yesterday's highs, however, which does make that so tempting. Oh, there we go. A couple of very strong buy signals across the board. While the red bar buy here on the hawk, not quite so strong. Probably the strongest of the bunch is this Raptor signal right here. which, although not touching the hard edge, visually still qualifies. Wow, and here I am stuck on my hands. Just a fantastic morning. Huge rally. Oh well, not the first move I've missed, and certainly it won't be the last. Just have to wait them out here a little bit. Now that they're back near yesterday's highs, this is where the sellers started pushing very hard yesterday. So we'll see what happens today. Wow. Wow. I hate getting caught on my back foot. And that's exactly what happened to me here today. It's still early. There will be other opportunities here, but it's unfortunate. I hate missing a great move like that, but what are you going to do? Now I'm just kind of in waiting mode. Once again, the market has limits to how far it can move before it's going to try to reset itself. So where we're at right now looks like around the 76, 73 zone. If we scroll back here into yesterday's day, there was yesterday's high. So we've just breached yesterday's highs. There we are. Okay, so here we go. We've got evidence of a short-term top again. Another continuation signal. This is always a little bit dicey. Okay, here we've got a late filter entry signal on the Falcon. Here now, once again, the filter going out of sync. So you can see we've had a really long run up. I start to get a little bit suspicious of these signals toward the end, or what I may deem to be the end of a trend. And honestly, folks, there's no real easy way to notice that other than just to wait it out. Okay, so now here we are with the soft edge sell. And I really hate for my first trade here to be counter trend given such a strong uptrend, and yet here I am. So the Geiger counter looking a little bit more bullish. I'm sort of banking on this being the end of the move. You can see opening range technically expiring according to the charting software about 10 minutes ago. We'll see here what sort of follow through we can get, if any. The hard edge, of course, the target for the trade. You could potentially stretch it a little bit, maybe back down here to the opening range high, or maybe even for a couple extra dollars try to get it here to the hard edge of the trading band. That would put us back here somewhere around 76.53. But once again, very, very ambitious in light of the crazy strong uptrend. Hey, way to go, Mark. Mark cashing in on a couple of those late filter entry signals. He said he took the early one. This one down here was actually a pretty good looking signal because we had a trend building or trying to build. And then we come back with the late filter entry signal. And of course, the way it's lining up, you can take it above these recent highs, even if you want to offer up a couple of ticks. So a little bit more structure here. whenever the market has a tendency to go sideways, you can normally anticipate a bit of a move. It's almost like it's winding up when it's in sideways mode. And then once it releases with a little more momentum. Hoping just for a little bit of a bear push here now before the buyers step in again, which they very likely will. I don't think the buyers have gone anywhere today. In fact, if I were smart, I would just be picking up any buy signal. You know, even just a random buy signal like this one. Even though nothing else is in sync, certainly the trend line, the filter, but we still have a buy signal. And of course, the trend just crazy strong. If you can afford to cover the position, you know, perhaps down here below the lows, that is a very, very doable trade. Okay, well, let's see what happens here. It's kind of crunch time as we're back to the first hard edge. So there's the first hard edge, the market responding there a little bit. If we can make that lower swing high now, that essentially would give us a 2-3-2 type setup and give a little bit more potential to a bearish move. All right, here are the buyers again. Oh dear, look at that. All right, last chance for the sellers to step up here and do something about this. See, I entered a little early. The right time to enter is if we get a sell signal forming now. That shows you the sellers recommitting to the market, and there will be a greater probability of success at that point. Nope, here come the buyers again. They're not letting go. You can see we're kind of at a tipping point right here around the 76, 70, 76, 71 zone. I'm not liking that. Oh, excuse me here a moment, folks. I got to grab a phone call. Okay, sorry about that. All right, here come the sellers again, and well, there's a little bit more hope for my trade. I'm anxious and considering rolling my stops above here. I'm going to try to give this trade a little bit more room. Come on, here we go. You can do it. You can do it. Oh my gosh, look at that. They're just holding on these lows. We have such a tight little trading range through here now. Very OCO-able, I would think. You could use your OCO order here to bracket a buy above or a sell below. Hmm. Really need to see the sellers step up here, though, because it's so long as the buyers are holding on to that. Well, after such a wonderful move higher, or as my English friend would say, a brilliant move higher, we've kind of hit the sideways skid. My only hope here is that the sellers do pick it up. I'm not really happy about the market waffling back and forth. Like I said, this actually does offer a pretty good OCO style opportunity. We have some very, very solid resistance here that we could buy a break above, very solid support. We could sell a break below. But the longer it stays going sideways like this, the more, well, the more it opens it up to a 50-50 reversal. And I don't like 50-50 trades. Okay, here come the sellers again. Look at that, back down here to the lows. I'm afraid that this big run up here for the first 30, 40 minutes of trading very likely was the move of the day. And like I said, I got cut a little bit on my back foot on that, but there is still a chance for a move lower here and a reasonable profit. As disappointing as it is to watch the market scroll past you without you, it does happen. And when those things happen, you have to keep in mind that A, trading is difficult, and that B, we don't need a lot of opportunities to make money, right? We're not at a production line. We're not at a drill press or whatever, making our the infamous widget. We don't get paid more by doing more. We get paid by finding the right opportunities. This one actually shaping up to be a pretty good opportunity for a reversal, as now we have our 232 set up, And maybe, just maybe, we'll see prices tail off here a little bit, take us back down here, at least toward the high of the opening range, which I think is very feasible, and then maybe even down here to this next resistance zone. I'm probably, now that we're making some progress, going to go in for a more aggressive stop. I'll get ready with it anyway. Oh, Andrew says the E-mini and the mini Dow, that's the ES and the YM, both are shooting up. Well, let's hope they put a stop to that. I need the NASDAQ to go down here. All right, so here we go. I'm going to bring my break-even trigger up to this point. So the next move lower will really be it for the sellers. Again, I'm still looking for a possible drift back here to the hard edge. I will manually bring my stops in above this high because I think a break of that level is pretty much means the sellers are done. Here we go with the continued slow grind. Okay, here comes another bullish pushback. So we are obviously still waffling. This is trying to become a reversal, or at the very least a very broad bull flag, in which case we can anticipate the market will probably head higher. If we could just see a little bit, there's slow follow through here to the short side, but if we could just see a little bit more follow through to the short side, that would encourage, I think, a little more active selling. All that early excitement, and now welcome to the exciting world of day trading. Well, at least it hasn't totally reversed on me yet, but I have to admit, the longer it's spending going sideways here, the more concerned I am that this is turning into a big bull flag. Okay, here comes the buyer's push again. I'm looking for these highs here to hold, these little swing highs. There will be more active selling as we get closer to the 76.70 area, which seems to have been very influential. I could probably do better with my stop at the original placement above the high here. Give me a little bit more staying power. I'm halfway tempted, like I say, to roll my stop back to where it was. I've waited the trade out this long. Now, if they're not going to play nice, I'll take the early stop out and be done with. It's funny how these big trending days, for me anyways, tend to give me the most trouble. Unless I happen to catch the trend signal early, I don't know what it is about these big trend days. They cause me some grief. You would think otherwise, but nope. Oh well. So I got a little bit of work to do. And the market not being all that cooperative here at the moment. Oh no, don't you dare. Look at the scoundrels. Oh, don't you dare. Okay, well, they're not playing nice. This calls for an OCO. I'm gonna bracket this range now, and a break higher, I will buy. A break lower, I will short. You stinkers. So they tagged me out, only to reverse off the highs. And after I was debating, rolling my stop up there. Yeah, yeah. Mark says, and the master continues to learn. Mm-hmm. We never stop though because the market is so random. Ain't that the truth? I've been doing this for a long time, and you get better, but I I don't think you ever totally master the markets because, of course, like Mark pointed out, they're random. There's always something going on that you won't quite account for. All right, so here we go. We're in the hard edge. We're not producing a buy signal, obviously, not yet. That would be a hard edge bounce. Depending whether the cloud went out of sync here, it may actually print as a #1 signal. I'm not really happy about all the candy striping that's going on, though. I think it's fairly obvious that we have ourselves a bit of a tight little sideways channel. All right, this signal now is going to be the hard edge. You can see we've got the warning. But because it's within this trading range, and remember, when you spot trading ranges, the sellers are likely to be up here, the buyers are likely to be down here. So it's always advisable, even though I'm not doing it, to allow for the breakout, the retest, and then look for the signal. Likewise here to the short side, the breakout and look for the signal. Signals within the trading range are always going to be a bit of a crapshoot. Enough of them will work out that you'll think you got it nailed. And then, of course, the market will give you the one time that it doesn't work. the exception that proves the rule. All right, here we go. We're testing the top end, and are they going to flinch again, or are they going to follow through this time? The Geiger counter looking a little bit stronger here. And now off the number 3 signal. Okay, so I'll start with a rather generous stop, and we'll see where it goes from here. If it goes anywhere from here. Wow. Just brutal. Okay, well, you remember how I told you the best way to treat these sideways ranges is to actually let the market break out, to look for the retest, and then your buy signal. Well, now you're seeing why, because the opportunity for a fake break is always there. And by allowing it to break and then come back to retest, you give yourself a little better chance to stay on the right side of the marketplace. Nope, no love from the NASDAQ this morning. I can't believe how everything has literally dried up. You know, we saw that, like I said, the opening range expire, and this has been our trading pretty much for the last hour. This whole zone right through here. That's been it. All right, gang. I'm going to get ready here to button up shop here shortly. You know, if you're going to continue trading this afternoon, I think, unfortunately, a sideways trading range is probably what we're in for. I would favor one more move higher, however. I think if the market picks up a couple of bars here, I'm going to get a little bit more aggressive with my stops, try to capture some of that open profit. It's not like we are trading in unfamiliar territory. Here is the daily chart for the NQ, and we're not quite to the contract highs, but as we get closer to 7,700, I think we're going to see a little bit more active selling show up as sellers try to defend their positions. All right, boys and girls, I will see you tomorrow, Friday. We'll talk to you then. Bye for now.